I would like to discuss unit level economics. We're going to dive right in, kind of working through a model. It's basically something you need to do in a spreadsheet. But what it refers to, unit level economics, it refers to how profitable are you at the unit level. And what unit could mean, any number of things. It could be an order, like an average order. It could be a service that you provide. Really, just, an order is kind of the fundamental way that you might look at it, or a service offering. But you could go down a million, sort of directions with it. It could be on a single product. It could be subscriptions, any number of things. So what it's going to show you is how much profit is happening at the unit level, and then how much cumulative transactions are going to need to happen in order for you to cover all of your fixed expenses, and then how much is left over after that, which is sort of profit. So this is different from your profit and loss statement that you'll have in your accounting software and that you'll use to report your, cumulative earnings and stuff to the IRS. This is just a model to use to just aid in your entire business. So let's just take a look at this. This is it's a very basic kind of model I put together here, but this would be an example of an e-commerce product business. And let's say that on average, your product AOV, which stands for average order value, is $100. And then you collect about $15 on shipping. Again, this is just on average. That would mean that on average, you collect about $115 just top line revenue when you get an order, say, on your website. Taxes, I know, could be a factor, depends on a million things, but it's a pass through. So you'll collect tax from a customer and then you'll pay that tax out. And so it's not worth modeling it into any of these models here. So we start with that top line revenue, that's how much comes in. And then we have these variable costs. What I mean by variable is it's directly related to that specific order, or at least an order. So there's cost of goods. Again, if it's a product-oriented business, need to figure out on average how much does each one of these, or the cumulative amount of cost for all the different products, if they're buying multiple things, what are those costs of goods sold? There might be some shipping costs. Well, there will be. So customer pays 15, but you have to fulfill that order with whatever shipping carrier, whatever shipping method you're using. Let's just say it's 10. Fulfillment costs could mean if you're paying a third-party logistics company or any, something along those lines, some type of a variable, like transactional level charge to get the order fulfilled. That might be another row in here. Processing fees are the credit card processing fees. So I just have, I think 3% is the multiplier I'm using here. That's a fairly good estimate. It kind of depends, but around 3-ish, high twos, low threes. You could just apply that as a percentage to this overall revenue figure right here. And then marketing cost per acquisition. Some of these are super hard to calculate. I might touch on some of this, but these all could warrant a full video in and of themselves. But just a number that you can either prove or you think is about right as far as how much you're currently paying or maybe plan to pay to acquire an order. So you roll that all up and it comes to a total amount of variable costs, in this case, $96. And then we just take gross revenue away from these variable costs and it leaves you with that amount there. I'm just calling this unit level contribution amount. It's not literally profit, but it's kind of sort of like profit. It's also known as contribution margin. It's the amount that you're getting on the unit level that you could use to apply towards the fixed cost side of your business. So that's where we get into this stuff. So you're getting orders. Let's say in this example, you're netting about $18 and some odd cents per. You can plug in numbers here to say how many orders are happening per month, either literally or what you want to see happen. And so that's the cumulative amount of dollars that are left over after you account for these variable expenses. So that dollar amount right there is what you'll use to put toward all of your fixed expenses that you need to just run the company. Things like your lease, employees, subscriptions, insurance, could be a lot of other things here. And I look at this as a monthly figure, at least it's easiest for me to model it in that fashion. And so then you sum all that up and it shows it's about $5,100. So in this example, and I did this on purpose, this particular business, if these were all, pretty correct, this business would need to do about 275 orders per month just to break even. That's this $1.25. Because after 275 orders, you walk away with 5,100, and you got to put all that right back into covering these expenses. So obviously that's a business that's not very healthy. It's, sort of teetering on the brink of not being profitable. And so you'll need to do any number of things. You could increase the number of orders, and then you might walk away with around that much per month. You could reduce some of these costs, which makes things look even better. But this modeling at least gives you a starting point. Now it's a combination of literally what has been happening in your business lately, which you'll use to populate some of these numbers, and that's actually quite hard to do. It could be a very deep data sort of deep dive to figure out what are you paying on a current basis for some of this stuff. But it's a combination of what's happening in reality now and where do you want to bring the business down the road. So it's kind of like a reality / forecasting tool. And what I mean by that is you could look at this and say, well, go back. You could say, well, I just can't afford to pay $10 to get these orders. I can only justify that. And so then you can kind of work backwards and just kind of define some of these other variables here. But that's the idea. Start with reality, do your best to put some of these in here, and then sort of gameplay how changing some of these things might affect your bottom line. Let me just show you quickly what a service business might look like. Let's just say this is a tree service, someone that you might have come out to remove a couple of trees or prune them or something along those lines. Same basic idea. Here it's just a service average order value. There's no shipping, no product. It's just how much you're going to charge on average to do a job. Let's just say it's that much. The costs are a little bit different looking for this type of a service business, but again, it's a variable basis. So think about how much gasoline, how much labor, what were the permits, all surrounding that sort of average service that you're providing. Also have a marketing cost per acquisition. And so that would leave you with a certain amount. Notice, by the way, in this case, $150 cost per acquisition is a huge number compared to the one we saw on the product level analysis, but it's because the AOV is so much greater. So you might be willing to pay that much to get, a service of that magnitude. But it's, again, same idea here. In this example, if this business is running about 25 of these a month, they're going to come out a little bit ahead. I'm sure they would also like to see a bigger number down here, but it's the same exact, methodology to work through. Here's all the variable costs. That's what's left over after you count for all of your fixed costs, and that's how much profit you would be running. I put gross because it's still not net. Again, it's not your profit and loss. It has nothing to do with taxes or anything along those lines. It's just a way for you to kind of get a high level perspective on your business. So that's the idea. I would suggest just starting and just doing your best. You'll probably run into a lot of challenges right off the bat with how do you find some of these. It has a lot to do with how many different platforms you're selling on, what systems are you using to get this information. Your profit and loss reports should have a lot, particularly the fixed expenses, but you might need to do some, pretty intense data analytics to get into other raw data files to come up with where you're at with some of these other expenses. This is a massively important tool. I've seen a lot of cases where clients are confused why they're not showing reasonable profit or any profit for that matter, because they are showing a lot of orders, a lot of high, top line revenue. And as we work this out, we find that that's a negative number. Just the top portion here is a minus number. So if you're losing money or sort of barely breaking even or making a little bit at the unit level, which is this row right here, you have no hope of surviving very long as a business because there's nothing left over or to pay for your fixed expenses, let alone if you're minus here, you're just losing money every time somebody places an order. So that's sort of the critical first question is how, is this number negative or positive? If it's negative, it's kind of like crisis time and you got to do something quickly to reduce your costs and all that you can to increase revenue. These are harder to change down here, generally speaking, but same idea applies. You want to figure out how to get that above water, get that, as profitable as you can on the unit, try to amp up the volume overall, and then always scrutinize these fixed expenses. So let me know what you think about that. I would love to hear if any of you found that valuable or if you're using something similar to this. Also, please let me know if you would like to see more detail surrounding how to go about calculating some of these, kind of the things to look out for, even if there's particular platforms that you'd be interested in getting additional insight into how do you get certain data points, say from Shopify or QuickBooks or whatever the case may be.